Hello, everyone. Welcome to Smart Investing. I'm Albert, the host of the channel. And today is July 4th, 2022, Monday. Markets are closed, but I'm open for business. So, I'm sorry to make this video so late. If you're in the Eastern Standard Time Zone, I'm in the East Coast in Florida, so it is 12 a.m. I'm going to go to sleep in a few minutes. I work tomorrow. Again, I'm a very busy person, so hopefully I can make this video in 15 minutes or less. So this video is actually going to be a presentation and evaluation on fundamentals and technicals on the banking sector, specifically the banking services sector, and also banks. Similar category, but just slightly different services, that's all. Because some banks are online and some are not. But still, this is still the same category. So again, I only have 5 stocks for the banking sector. I'm gonna try to slow it down. I know I usually do. I mix it up. Sometimes I do more than 5. Sometimes I do less than 5 or about 5. I used to do my old videos like that. But again, I want to keep the video shorter than possible. I don't want to bore you guys. So hopefully you can get valuable feedback and information about this video. So again, let's begin. Let's go to the 5 stocks I'm going to go over. So again, this is the stock market from Friday, and that was just basically the movement for that day. So we're going to go past that, and then we're going to look at some companies here. So the first one up that I have is CBMB. We're going to go over the first page. Looking at the numbers, for technicals, I'm not crazy about it at all. For fundamentals, it looks kind of tricky. It looks like it's holding up. You can see here, that looks like a zone there. And then it's popped up from that. And again, it's just stayed flat. So I don't like it, to be honest, at all. Fundamentally or technically, there's just not a lot of movement. It's okay to see flat lines, and what I mean by that looks flat to me right there. That looks a little bit flat. Right here, this looks a little flat, and I see too much flat. Again, I don't like seeing flat too much because that just means that there aren't enough buyers or sellers. When you see that, that's just not an active stock. So, yeah, you can try to buy as many shares as you want because the company's cheap on price, in which what a lot of people love to do. But me personally, and again, I can't make recommendations, but me personally, just for me alone saying this, I just don't like, um, I don't like stocks that are not active. That's all I'm gonna say, fundamentally and technically. So we're gonna move on and see what other information we have that is presented to us. News, I don't really look at the news. You guys can always do that at your own time. I personally think, you look at my videos, I don't really go over the news. Rarely, it's rare. Maybe 1 or 2 out of my hundreds of videos, I think I've mentioned the news. And actually clicked and read it. Just because I needed to be more critical on it, but I think news is just smoke and mirrors. Half the time it's just false, and it's hard to believe what is true and what is not. But again, I always try to see what is accurate and see what's not. So again, I always say the truth here on my channel, and this is why I do what I do. So comments on the applications, I don't really read them. I don't want this to be a disturbance to the channel, or I don't want anybody to get offended by certain stocks. Again, some people might like certain stocks. Some people might not like it at all. So again, I'm not being biased at all. I just want to provide a useful resource and information uh, source for this channel, and just going over it with you to provide, feedback and general information. So the sentiment here, nobody's really voted on it. I mean, it's 50-50 right now. I don't really look at the prediction history, which this is new to Webull. They have prediction history, and it looks like nobody ever voted on it because, again, nobody looks at small cap stocks like this. I think I'm the only person on the planet for, in the US, I guess, who actually looks at or tries to look at every single stock and do it in an orderly fashion. So, again, I'm telling you this from experience. I've seen other channels on YouTube. I'm not taking credit away from anybody, but I haven't seen any other channels that actually talk about other stocks like that are unheard of. So again, the reason being I don't even like this stock, and I'm not even going to go over the financials at all. It is because they're also an over-the-counter, OTC, right here. I don't know if you guys see that up top. OTC means over-the-counter. So what that means is that these guys are private buyers and sellers, meaning there's not a group of people so basically the stock market is basically a big auction house. You have so many people from like across the US, outside of the US, within so many, people along each state. Now, when it comes to OTC, when it's private, you have a very, very limited number of people that are only buying this stock and selling this stock. So when it's over the counter, that's exactly what it sounds like. It's almost like you're walking into, I don't even know what to say. It's almost like you're walking into a bank and you only have, one person to go to. And that's pretty much it. You only have that one person, the one banker, the one teller at the window saying, "You want to trade with me?" And that's it. And basically, there's not a lot of price movement. There's not a lot of negotiation for price. There's not a lot of rights that you have as a buyer or a seller. Everything is just pretty much straightforward, and it is as it is. There's just not a lot of benefit when it comes to OTC. Yeah, it's higher risk and higher reward, but me personally, that's not a risk I like to take. It's just, it's a high chance that you might not even fill your order. And if you do, if you want to sell it back, it's just so much harder. Put it that way. It's harder to do business under these standards. That's just the bottom line. That's all I can say to try to get you guys to understand that. It's harder to do business when you're doing OTC. Excuse me, I apologize for that. So, moving on to the next stock, I'm not even going to look at CBMB. So, that one is actually a no. So, I do not like that one. So, the next one up, we have OPRT. So, looking at this, it looks like so first thing that I notice is very cheap stock. Market cap is not too bad. It has work to do, but it's still doable. I do like the support for it, even though this is kind of low. I do like the 52-week high and 52-week low as a general guideline, and their earnings per share as well. So the chart seems okay. It seems normal. This seems like a normal chart, and it seems like this is about right as to what happened in 2021 and now what's happening in 2022. That seems about right. So it seems somewhat active. I don't know how active this will be when the markets are open. For fundamentals, I would have to look a little bit deeper. So now we're just gonna look at the quant rating and see what is happening with this. So we have here a 9 for growth and a 9.67 for value. I've never seen high ratings like this, even above 9. Honestly, I've never seen ratings this high on any stock, and especially you have 2 high ratings. This is pretty rare. So I trust Webull that they give me accurate numbers and accurate feedback and info. So as a general feedback, I'm gonna take it as it's good growth and it's good value. It doesn't have good momentum and no income. That's fine because it can grow. This, since there's no income, it's getting substituted for growth. So that's where all those numbers come in. Now, I mean, usually for a company, you would think. Sometimes that's not the case, though. And so I wonder if this stock is new. If this is a new stock, then it might have potential. So we're going to look at technicals for the Webull signals. So for short, it's pointing that it has a vote of, it's actually even. 2 bullish, 2 bearish. For the medium term, I see 1 bearish, no bullish. And for the long term, nothing. So it's tied. So now we're going to look at some numbers here. We're going to look at actual estimates. So I'm looking at this here. So I like this. I like this. This is okay. They still beat it. I like this. So, okay, that's good to see. They are continuing profit. It looks like some high margins, or either way, they're keeping their money more often than regular. So they're doing something right. They are doing something right. So their earnings per share have gone up dramatically, because then I can see here. Now let's because look right here in 2017 was negative. Then in 2018, 0.62. Then they dropped 0.4. They dropped hell of a lot in 2020. And then now, in 2021, it's 1.56. So now that tells me that they're getting back on track compared from 2020. I'm glad they gave me revenue. So then also, it just seems like they're keeping more of their money. I think, let me look at the net margins. I'm surprised their margins are not as high as 2018. The debt levels, about the same the past 5 years. It looks like they're growing their cash reserves. So it's hard to say how they're keeping more of their money. But we're going to keep digging through. So their revenue has gone up. Usually that happens from year to year. That's always a given. So in 2021, their assets has gone up quite a bit. So we're gonna see. I think they're keeping their money from the cash flow. That's got to be it. 884 million, 745. So 884, 163. So that would be about 900. So it's got to be their cash flow. Their cash flow has definitely gone up. So we see here their financing in 2017, 230 mil, 368, 286, negative 136, and then in 2021, 745. That is an insane amount. So we look at these bars here, and it's just insane. It's just insane. So they're if they're financing something, what are they doing? Equipment or something? So I actually want to read the news and see. So basically, this stock is at a downtrend, but so they're not a banking sector, but they're in the consumer lending. So, I mean, this stock, it has potential. Definitely has potential. I definitely would add this to the watch list. I would definitely add this to the watch list. They're saving cash. This is a company that they're saving cash. I don't know what they're doing. They're doing something right, but they're saving cash. This company might be a sleeper company for growth stock. Actually, I would actually add this stock. So next one up that I have is ECPG. We're gonna look at the first page there, and then we have it at 52-week high and low. That's pretty strong. So the chart I like. So analysis. So we have a quality measure. All around, it's pretty good. They received good numbers. Momentum is at 8, value 7.5, growth is at 7.3. Not too bad. So overall rating of 8.1, rounded off to 8.2. So that's a really high rating. It's a really good rating. And market cap is only 1.43, so not even a small cap yet. Very undervalued. And we're going to look at some numbers here. So the numbers have really taken off for the first quarter. I mean, look at this jump. That is a really big jump. So they went from around under even $3 all the way to, like, let's say 6. So they pretty much doubled for the first quarter alone. They doubled their earnings for the first quarter. That's hard to do in an environment like this. So now we're gonna look at some numbers here. Again, we're gonna look at the annual numbers. I don't like looking at quarterly. It's just too spread out for me, and it's just more accurate for me to look at the annual numbers anyway. So we have that. That's growing. Return on equity is growing. That's growing. This stock definitely it. What's the share price again? So it's at $58.83. This stock actually it looks like a growth stock from the way the numbers are and the bar charts are. This is definitely looking like a growth stock. I would say watch list this company. Definitely you want to watch list this company. Again, and it's interesting because so far, even the company beforehand, again, they're not paying a dividend, and I guess it's because they're growing. So now we want to see what they do. So they are corporate financial services. So let's read a little bit about them. And again, I'm going to say yes to this company to add to the watch list. So they provide debt recovery solutions across a broad range of financial assets. So I'm looking at locations. So at the bottom of this screen, I see here. So it says the company, through its subsidiaries, provides credit management services across Europe, U.S., UK, and Ireland. Sorry, not the U.S., just Europe, UK, and Ireland. I thought it said United States, but that was my mistake. So the corporate financial services. So I'm gonna say yes. And again, so far, like I said a little bit earlier, some companies they might not be in the banking sector, but it's a still similar category, and that's exactly what I was talking about a little bit earlier. So, yeah. So, for example, like I said, um, there might be some stocks that are good in the banking sector and some that are not. But then you also want to compare them to similar categories. That's a major factor. Um, you still want to see other factors, maybe by market cap or by location, and still you just want to see what's what. So yes, I'm gonna say yes to that stock. So next one up, NNI, Nelnet. So share price is pretty nice. It's not too cheap. I don't think it's too expensive neither. Market cap ain't too bad. That's a good sign. Undervalued. They do pay a dividend, so that's good. 5-year chart. It's holding up. 1-year chart. Looks like it's holding up. There was a big sell-off there. You see that V? V is for violence, as I always say. And that is a big drop. So we're talking about from $86 all the way down to $73. That's a $13 loss within, let's see, so this is from June 7th all the way to June 24th, less than a month. So $13 and less per share, a $13 difference in like 3 weeks. That's quite a difference. You don't really see that too much. I mean, you do, but for small cap stock like that, it's not common. So it looks like it's holding up. So far, I'm gonna say yes. Fundamentally, but to use this as a technical trading, to use this stock for day trading, maybe swing trading, I'm gonna say no. But again, fundamentally, yes. So fundamentally for the long term, and technicals is basically for the short term. For short term stock, no. Long term, I would say yes. So quality, value, growth. So it ranks close to a 7. That's not bad. I'd say that's borderline. And we're still gonna look at the numbers. So they grew a lot in 2022. So the financial sector might have a chance to do good and grow. So 2021, then earnings per share, net margins, debt to asset. Oh, I don't like that debt. That debt is really, really high. Um, it's tricky. I mean, if you don't care about debt, depending on the company, that's highly leveraged. So it's almost to say like you have to be like 99% sure, like you're guaranteed that they're charging um people interest on their loans, or aside from getting their money, it's like you're getting an extra fee on top of a principal. So this seems like a company that let me see their profile real quick. So they're in the consumer lending. Yeah, because banks don't really do that. With consumer lending, that's just their main goal. Just to give you a loan and specialize in a certain industry. Banks usually are more diversified. So that's pretty much the main difference. But I I think this company acts more like a bank than the actual consumer lending, because I'm not too sure, but I can look into it. For the most part, banks are usually high in debt, but consumer lending to be that much in debt, that's just not a good sign. And the reason I say that is because there's not a lot of competition, so it's like any any little factor that becomes an improvement for a company or stock, especially when the category is so narrow, you don't have a lot of competition and you're in this space, and if you can make room for improvement really, really fast, and even if you keep that up for a certain amount of quarters, and it's consistent for, like, let's say 2 or 3 quarters, then I mean a company like that can actually have really, really high potential to grow at a really fast rate. So we're gonna look at the dividends real quick. So they are paying dividends and raising dividends. That's definitely a good sign. They never had stock splits. So again, it's tough because the company, it's a good company. I just don't like their debt. That's just me. I mean, to each their own, but this is what my evaluation is. Um, I guess you can add it to the watch list, but I just really hope they get rid of the debt. Having debt is not uh something to take lightly. Definitely not something to take lightly. So I guess you can add it to the watch list. So last but not least, NICK, Nicholas Financial. We're gonna look at what kind of company is this. So again, they're in the consumer lending. So it's not a bank, but it's similar to it. That looks uh that looks pretty flat. Then it dropped. So I'm not fond of it. Um so far I don't like the stock. looking at the numbers, it doesn't seem like people are buying into this stock. So by the numbers, I like how they have low debt. That I like, but they just don't seem popular. That sucks. Maybe this company actually had potential, but people are not recognizing this company. The revenue is actually dropping. That is actually not a good sign. That is definitely not a good sign. So, with that said, I'm gonna say no. For this stock, don't watch list it, don't add it, nothing. Yeah, it's going downhill. Uh, and this is the past 5 years. So you can see this is 2018, 2019, 2020. It just keeps going down, 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 down. I could understand, again, if it went down 1 or 2 years, fine. 3, maybe. But after the third year, and especially from 2020 to 2021, everybody just had a good year. So many companies had a good year. And you would think that you have a chance to build up that cash flow, and you just haven't. So I'm gonna say no to this stock. Dump it. I actually think, looking at the numbers, I think this company is gonna go bankrupt. I think this company is not gonna exist uh, by next year. So mark my words, I'm gonna come back and check on this company, NICK. If it gets bought out, I'll be surprised, but I don't see it lasting till next year. If we have a down year, which I think we will, towards the end of the year, I don't see this company lasting next year. So that's my take on it. Um, that is all I have for you guys. So sorry this was a half an hour video, but now you see how I do my evaluations. Again, I'm not just picking stocks saying yes or no as to why I like them and why I don't, all because of the location or what and whatnot. Again, I don't have a biased point of view. I'm always neutral until I actually make the evaluation. So this is why the channel is called Smart Investing, because again, you want to make smart investments and you want to see for yourself what you can do for yourself. So again, thank you guys for watching. I'll see you guys in the next one. The next one will most likely be a short video summarizing this video, and I hope you liked the video and you learned a thing or two. If you haven't, please watch my shorts and I will summarize this video. So again, thank you guys for watching, and hopefully I can make a video this week, and I'll see you guys in the next one.